Let's focus on City Union Bank now. Their first quarter business momentum was weak. Deposits declined. Advances saw muted growth. Sequentially, margins also fell. Mr. N. Kamakodi is MD and CEO at City Union Bank. Mr. Kamakodi, good morning. Great to have you with us here. Thank you very much. Prashant this side. Now, we are, of course, we should talk about what Q2 is looking like, right? Q1 is now, in a way, a bit of a distant memory. Has business momentum
Prashant,
picked up materially in Q2? Could you start? Yeah, go on.
Prashant, actually, we see it as a 10% growth point to point. And normally, we used to have a negative first quarter, but this is the first quarter which is positive after almost 7-8 years. So the things have got well, and our ROAs have crossed 1.5, and our overall the PAT growth was about 16%, and overall the first quarter growth was indeed, like the momentum has actually set in. We in fact, we typically used to have about 15% growth till the December 2022, and the calendar year 23 was not a good year for us, and there was like say some sort of like say layback, and things started improving from there onwards, and it has already crossed 10% for that. And we are able to see the overall business proceeding in this direction without compromising much on the profitability metrics is what we have been seeing.
Mr. Kamakodi, good to have you on. So the hottest talking point when you're talking to a banker these days is the whole issue on deposits, the fight for deposits. What is the experience that you're having, and what projections do you have? Because I think when we spoke to you after you declared numbers, first quarter numbers, you were expecting growth to touch double digits. So what is the gap between deposit growth for you this year projected and the loan growth that you're forecasting?
Basically, we have already crossed like a double digit in the Q1 itself, and things are progressing in a stable and steady fashion. You have like say this sort of like over a period of multiple cycles which you have seen, there always used to be some amount of a movement, like say the gap between the deposit growth and advances growth. Like say sometimes deposit growth overtakes advances, and sometimes advances growth overtakes deposits, and some amount of incremental focus into the like say the mutual fund industry perhaps like say created this amount of debate, and we are all working for that. At the same time, you also hear the reports sent by like say SBI, which is perhaps talking that like this amount of discussion is perhaps a little bit overstretched on the realities of that. Yes, we are conscious about it, and so far we are not seeing a stage where our deposit growth rate will be limited by the deposit growth rate, and we have enough buffer with us, and we are also like every other bank trying to work out our like say strategies, expecting things that are expected to be.
Sir, can you share some numbers on the CASA ratio that you're hoping to maintain? And what is the deposit mobilization target for this year? I mean, there must be some rough range you have in mind.
Basically, the overall CASA growth, like say, we had like say always had like say in the lower quartile in terms of the CASA percentage right from the beginning, and the last 7-8 years, the CASA percentage has in fact increased from lower 20s to about 30%, which is a substantial improvement which has happened in the last 5-6 years in a steady and a firm manner. We are expecting to like say go ahead with the same amount of numbers in terms of percentage CASA. We expect the like say overall credit growth of the system to be around mid-teens, and we also hope to achieve and aligned with the growth rate of the system. And we also have our like say main mode of liability side had been the retail term deposits, which had been our main source of numbers, and we are seeing things as per our expectations, and we don't expect the deposit growth to inhibit the credit growth for the next 4 to 6 quarters going on.
So just to clarify, when you said mid-teens, that's the expectation on deposit growth or credit growth?
credit growth and sufficient deposit growth to take care of that thing.
Okay, mid-teens credit growth. Got it. Just
Mr. Kamakodi, good morning. Nigel on this side, and good to have you on the show, sir. Let's focus on your new business. New business as a percentage of the mix, what is it currently? And how do you see this business scaling up? Point number one. Point number two is, margins, I think, were in that vicinity. NIMs were at around 3.5% for the past quarter. What's the range we should work with?
Basically, if you had a chance to look into our net interest margin over, let's say, a decade or so, our range had been between 3.4 to 3.7. We are very much on the upper range. For about 7 to 8 quarters, we are 4% plus, which got subdued for one of the main reasons is that, like, some of the, let's say, penal interest and all overdues need to be started with getting us your charges, which impacted about over 10 to 15 basis point reduction and all. In that, we are currently our long-term average range of 3.4 to 3.7, which we expect that range will continue for the future. We mainly like our monthly, let's say, disbursement is to the range of about let's say 1,000 crore to 1,100 crore, which is getting set. And normally the let's say we are in the second half used to typically take care of about 60% of our incremental business. And the one good thing is that we have not seen positive momentum in the first quarter, which we have seen positive growth in our loan book after maybe close to 780.
okay. So just very quickly, quick last point on asset quality. You've actually shown a small improvement sequentially. We were talking to one of the other gold financiers, one of the NBFCs, and they have seen some delay in payment. So just trying to check in them, and there's also that showing up in the MFI vertical. So just wanted to know if you are seeing any concerns with respect to repayments in any of your lending groups.
Basically, as you know, we are like say bankers mainly for MSME, commercial trading, agriculture, and the gold loan, which together constitute about over 80% of our loan book. We are currently going through probably best of our asset quality cycles at let's say if you even look into the pre-COVID days, the even the SMA2 numbers roughly used to be about 7.5% and about 2 to 4.5% slippage. Currently, those numbers are very much around even less than 3%, around 4.5%, and all. We are perhaps seeing the best of the overdue numbers, whatever I have seen in my maybe 15, 20 years of managing the.
Okay, all right. So thanks very much for joining in. Good to have you on, and appreciate you sharing all the perspective with us.